Thanks for joining us at XM.com for the weekly Outlook. I'm Christina Marujos. Joining me today is investment analyst Marios Hadjikyriacos to have a look at the week ahead. Now, Marios, this coming week looks relatively quiet in terms of crucial events. However, it does have its highlights, which we will have a look at in a bit. Firstly, though, I'd like us to talk about this ongoing conflict, let's say, between the bears and the bulls, given the uncertain economic developments around the world. Despite some positive data, we haven't really gotten back to normal, let's say, since the pandemic is still raging. Why is there so much optimism in the markets?
Hello, Christina. Well, there are a few reasons for the market's optimism. So the biggest one is all of the stimulus that both governments and central banks have done. The second one lately has been the encouraging string of economic data. So yesterday we got the US employment report. It showed that the labor market continues to heal, and the markets got really encouraged by that. Now, a third factor has been the medical developments. So we've had a lot of, let's say, positive headlines about the potential vaccine lately, and at the same time I think there's a lot of optimism in the market because even though we've seen cases rise, the death rate is still relatively low and the healthcare systems are better equipped and have more expertise in dealing with the virus right now. So there are a lot of bull arguments. However, there are also a lot of risks on the horizon over the coming weeks. For example, we've seen Texas, California, and Florida close down a lot of businesses lately, including bars, and that will only show up in the data for July. So over the coming month, we might see some less encouraging data coming out of the US. Even more importantly, though, I think that it's the prospect for more stimulus that will grab the market's attention. Right now in the United States, a lot of the government packages are about to roll off or expire at the end of July. And so far, Congress hasn't shown a lot of urgency to renew those. So that will be a crucial theme, I think. If we don't see Congress acting powerfully again, that might be a very big factor that could weigh on risk assets, especially after the strong run that we've seen in recent weeks.
The story, of course, is unfolding and remains to be seen what the outcome will be. Let's turn to this week's events, though. The RBA is meeting on Tuesday with markets not expecting any changes to its policy. Australia, though, has been experiencing a spike in virus cases lately. So how do you see the Aussie performing?
I don't think the RBA will do anything or say much for that matter. Recent developments have been more or less mixed, especially on the data front. We saw some labor market weakness, but that was offset by a strong services PMI. Now, I think that if anything, we might see a slightly more dovish tone from the RBA, and that's owed mainly to the spike in cases that we've seen in Melbourne lately. So some of the suburbs in Melbourne have been placed back under lockdown because of a new cluster of infections. The last time the RBA met, it sounded pretty happy about the fact that Australia had the virus under control, that the lockdowns were being rolled back sooner than expected. So this is likely to be a piece of bad news for them, and I would expect that to be reflected in the statement. They could strengthen, for example, their commitment to add even more stimulus, and if they do that, that could hurt the Aussie, but only a little bit. The currency's overall direction will be decided mainly by risk sentiment and how tensions between the US and China evolve.
And regarding important data coming up this week, the U.S. and Canada are reporting their employment numbers and jobless claims, which will give us a rather clearer picture of how the economic situation is evolving. Should investors be optimistic, and how do you see the dollar and loonie moving this week?
Well, the dollar is more or less a mirror reflection of risk appetite. It's a safe haven, so it moves in opposite direction to stock markets. So that's the biggest theme. Now, as far as the data, I will be looking at the weekly jobless claims. Those will show us what kind of impact the reclosures in California and Texas had on employment. And across the border in Canada, the loonie has really not been able to capitalize on the risk rally that we've seen in the broader market. That, I think, has to do with concerns about the US. So Canada relies so much on the US market that any weakness in America will inevitably spill over into Canada. And another reason for that performance is that the White House is reportedly considering new tariffs on Canadian exports. So it will be interesting to see how those play out. The loonie could get a small boost from the jobs data that are coming out on Friday, but the bigger theme will be the US virus picture, even for the Canadian dollar.
Marios, thank you so much for joining me today, and thank you for watching the Weekly Outlook here at XM.com.